Ever finish pricing out a big job only to wonder if you'll have enough cash to actually complete it? Cash flow problems hit contractors like a hammer to the thumb, painful and impossible to ignore. In today's episode, we're tackling why contractors struggle with cash flow and how to fix it for good. We're talking practical solutions to stop that feast or famine money cycle. This is the Contractor Success Forum. I'm Wade Carpenter with Carpenter Company CPAs, alongside Stephen Brown with McDaniel Whitley Bonding and Insurance. Stephen, what's the first sign you notice that tells a contractor they may be having some trouble with cash flow?
Well, they're not paying their bills. Your vendors count on you, and they're your lifeblood. And when you're not paying, your bills are not communicating certain issues, that's a huge red flag. And your comment about the pain of hitting your thumb, that's so true. I think what I want our listeners to know, Wade, from this podcast is just take a deep breath, listen to the podcast, and there's things you can do immediately. There's the triage. This is not a podcast all about just, oh, well, this is what you should have had in place. And if you had, this wouldn't have happened. Well, that's true. But we also want to help our listeners who are going through this because, like you said, Wade, it just feels like a nightmare, doesn't it?
Yeah, and there's different forms it may take. I'm sure you experienced it, but payroll panic every week to cover payroll by Friday. Is it a weekly scramble to cover payroll? That may be one sign that maybe you're having some cash flow problem. I always say it like you're borrowing for the next job to pay for the last job.
Mm-hmm.
That's a common complaint I hear.
Yeah, we use the phrase robbing Peter to pay Paul.
Right. There's several other ways you could say it. Are you losing sleep over your finances? If you got like $100,000 receivable and you can't pay your light bill, something might be a problem. I guess you could say if you can't pay your light bill, you might be a contractor. I don't know.
Yeah. Oh, that's a good point. It really is. And as you're in that point where you can't pay your light bill and you can't make payroll and you're looking for a bag to breathe into, to just keep from hyperventilating, just take a deep breath right now. Breathe in, let it out. There's always something you can do. There's always something you can do. And then, Wade, we have another paradox is you're sitting on too much cash and then you're going to have another cash flow crisis coming up. Well, this podcast really speaks to that as well, doesn't it?
Yeah, and there's a lot of things you can do to start making things better. But if you're still constantly telling yourself you're not broke, your money's just taking the scenic route to get to you, well, maybe that's a sign that you need to be doing some of this stuff a little differently. A lot of our contractors understand where we're coming from, but you got to do some things differently, I guess is the point of today. What I wanted to sort of talk about today was like construction cash flow is if you're laying block on quicksand, you're not going to fix your foundation. You don't fix your cash flow with a shaky foundation. The
Right.
whole structure will come down. We could talk about why some of these things happen and then how to fix it. But have you got any thoughts about the different things that go into construction cash flow that end up causing all this grief for contractors?
Well, the time to get paid, there's long cycles on certain projects. And then also in the flow of the type of work that you do, you got weather delays, and then you got to upload upfront all your material cost on the job as well. Some of the things that are hitting your cash flow are just normal. You say, okay, well, I know that I'm a contractor. This is what I do. And I know that I'm going to face that. But there's a lot of other things going on behind the scenes that you have to be aware of too, that could be just constricting that cash flow.
I think we should probably unpack a couple of those things.
Okay.
But you talk about restricting your cash flow. You think about your cash flow like your garden hose. You got a knot in your garden hose. Maybe you got multiple knots in your garden hose. Your cash flow is technically in your hose, but it's not getting to the plants to get it where you need it to be. It's not flowing freely.
Okay.
So, these kinks in the hose, just like the kinks in your cash flow, you're not feeding your business properly because of things that just keep popping up. And these kinks it's just frustrating.
I wanted to make sure that as we did the podcast today on cash flow, there's so much, like you said, to unpack into what's affecting the cash flow, what's tying those knots up in the hose to keep you from watering your garden. So I also really wanted to speak to someone who is absolutely immediately too stressed about their cash flow situation to really give a lot of thought. You know that expression, it's hard to see the forest from the trees. You're stuck in this situation. It's hard to see what not is really hurting you, what overhead is doing to you, and then what your payroll is doing to you. Those are the things, tax problems you might have. My advice always just start with something. Where do you start, Wade?
I want to stick to a couple of these things that you were talking about before, like these long payment cycles. You feel like you're constantly being the bank for your customer. And it just like you pay your guys, you pay for your materials, and then you send the bill, and then you wait 30 days or more. Then they drag you out on getting that. They delay it or say, hey, my bank didn't approve this payment or whatever, or it's just hold back, or just things like retainage that you don't have in other industries just are constant pressure on a contractor's cash flow. We have things like seasonality in construction that don't hit other businesses. It ebbs and flows, and it's just never seems to be this. That's why I use that kink in the garden hose analogy. It's like, it seems like things are going along all fine, and then you hit one of these little things, and it just sort of throws everything out. And that's what we're talking about today. How can we get out of that kind of cycle?
I think it's really important that we also get into the overhead and how it's always more than you think. And it's always
Oh,
growing
yeah.
in ways that you can't really grasp.
Yeah. And, I guess there's a lot of things that the traditional solutions, like, how do we fix it? And like I said, I say in my book, everybody thinks you need a bigger boat, just from the movie Jaws. Everybody thinks more revenue fixes all the problem. And that's almost like saying your diet problem is going to go away if you just buy some more groceries. That doesn't really work that way.
Mm.
And we're going to do another episode on this particular problem. But, as you grow, you do have additional overhead. Constantly see problems with contractors not really knowing what factor of overhead to put on there. The traditional solutions, if you're got everything in one bucket, one bank account, I would say,
Mm-hmm.
then you're basically driving blind. You and I know I came from the audit background and the tax background and the CPA. And I've always said, hey, you're supposed to have great books and great job costing, and that will cure all your problems. And I absolutely agree that you need all that stuff. Especially, I couldn't get stuff to Stephen if we didn't do it. But those are not the same thing as problems with cash flow.
Right. I really do think, Wade, that the profit first concept of breaking that job down into different units and just literally apply the funds to the different buckets, so to speak, is always the answer. Those numbers absolutely tie into your expense, and it's there. When the money comes in, it is there to pay that expense. And then Profit First says you literally are paying yourself and you've got a profit bucket. It sounds so simple, and it may take a little work to implement, but it's so powerful, Wade. It stops this cash flow nightmare from occurring. It allows you, talking about seeing the forest of the trees, you've got each bucket pointing you in the right direction on a job. And you can say, well, y'all don't understand how many buckets that I have. Wade, you really do. Yeah, you do. You're a construction accountant. You do know. And it's a partnership, isn't it, for getting these set up?
It is absolutely, but the accounting rules and what would go into job cost
Mm-hmm.
is not the same thing that I would put in my book. I call it job expenses or job X bank
Job X.
account. That's not necessarily cash out on your job. So if you've got like depreciation on your excavator, that doesn't go out in cash. But what does go out in cash is your note payment on those excavators and those kind of things. But I guess sticking with what's causing these things. And I was actually discussing this with a contractor yesterday. After COVID, the disaster loans, they were a godsend to businesses because there's a lot of contractors that would have gone out of business without them. The problem
Mm-hmm.
was people use these as a crutch, or it's like, okay, money's here, so whether you got these EIDL loans, which were like once in a lifetime things where you get 30-year mortgage with 3.75, you're never going to find that again. But again, if you're relying on getting a line of credit or whatever, those are definitely helpful as you grow, but that's helpful until you start treating them like it's income and start spending money faster than realizing that you're just digging a deeper hole.
Mm-hmm.
What I was saying before, I still believe you need financial statements. Absolutely. You need great job costing. But that really is looking in the rearview mirror. It doesn't help you drive that truck forward. Yeah, you need that history to see and predict where you're going, but what you're leaning on is your cash flow. So if that makes some sense, maybe we can start talking about the profit first solution that I'm proposing in my book, and maybe you've heard of. Any
Mm-hmm.
thoughts on that before we jump into that part?
No, let's jump into it because it's everything to understanding how your cash flow problem occurred. Because until you can figure out how these problems are occurring, you can't provide a solution for them. And that's the frustrating part to a lot of contractors. My phone's lit up. Everybody has got a problem. Everybody wants to be paid. I don't have money coming in. That's the time that you really have to hit that pause button and just say, pause. This is the most important thing I'm dealing with. Everything else can wait. And it's hard. I can say that to you, but until you're in a situation to do something about it, you probably won't listen to either one of us, Wade.
That's sad, true. But
Mm.
to boil it down, what the profit first system is and does is basically gives every dollar a job to do. Let's just say, like, you're the general contractor for your own cash. And all these people you pay, we need to put them in buckets, just like on your job. They have a specific job to do. And everybody with their hand out, there's nothing going to be left over if you just let it fly out the door. And that's part of the problem. So let's talk about some of the core principles. The first principle I would say is that you got to accumulate your money in one place and keep that separate from where you spend it. And I know that sounds silly and stupid, but if somebody is just always out there, like in the book, I use the analogy of a salad bar, like you put the food out and then all the good stuff gets taken up. The money goes out fast as it comes in. That's just what happens when you don't have control over it. So you need to accumulate it in one place, and then we need to start putting it out on the salad bar.
I would prefer all you could eat seafood buffet to the salad bar, but
Okay, well,
I'm sorry. Go ahead.
it's okay. And then, like I said, you got to allocate it to different accounts based on their purpose.
Right.
That's the next
Sure.
core. So if you don't put some aside for you and for your profit, it's not going to be there because there's always somebody with their hand out. And
Mm-hmm.
you're always going to find a reason, hey, I'm just reinvesting this money in my business or whatever. But when tax time comes, the money for your taxes are not there. So again, after we accumulate it in one place, we're going to allocate it into different buckets for specific purposes.
Yeah.
And the next concept of this is we need to have some order to the money movement and how we let it come in and go out. Because if you have subcontractors showing up at your door every week looking for a check, waiting in your lobby to pick up a handwritten check, or you have to drive an hour or so to take a check and back or stuff like that, you're at the mercy of this just chaos. It's like people are just coming all over the place. The
Yeah.
purpose of what I'm saying is you got to create some order to your money and a rhythm for depositing your money as well as paying it out. Does that make some sense?
Absolutely. And if you're in this class of situation, you've been that person in the owner's lobby waiting for a handwritten check. You have. I've certainly had to do it over the years, and psychologically, it's necessary, but it just creates a cycle that just doesn't seem to end. If you're waiting to get paid, you have to end that relationship with that person that's not paying you just as fast as you can. It's the same as a contractor in a situation where you're not getting paid in the cash. Your contractual documents ought to allow you to just shut everything down. Talking about getting their attention. But we weren't really talking about that way. We were really talking about allocating the operating expenses, the OPEX, you call it.
Well, that and the job expenses too. That's money for other people. And if you never stick that money aside for the job expenses, and again, knowing exactly what goes into that, you're constantly going to be borrowing from that next job to pay for the last job.
Okay.
So, it seems like this vicious cycle, and you got to break the cycle. You got to do some things like putting it in these buckets and having some order to it.
Mm-hmm.
And then the last principle of that is like removing some of the temptation.
Mm-hmm.
Part of it is separating a different bank account. Some of it may be moving it to a different bank.
Mm-hmm.
But every job has a purpose.
No, that's a great statement, Wade. Every job has a purpose. It does, and every job has expenses, and every job hopefully has profit built into it. And as we keep talking about this, the real thing, operating expenses, job expenses, setting up your profit in a separate category. Tell our listeners a little bit about the nuts and bolts of the names of these categories and why you set them up that way. Because I know we've done a lot of podcasts on this topic in the past, but right now we might have listeners that are in a cash flow crunch right now that want to just grasp your book, Profit First in Construction, and getting these concepts into place.
Yeah, again, the original book and the derivative book that's already out there for contractors, they still lead everybody to believe that there's 5 main accounts. But I will tell you, you need a minimum of 6 accounts if you're in construction.
Mm-hmm.
And the first one is what I was talking about. Like you need to accumulate in one place. That's an income account, just like a staging area. Your job expenses account, we're going to carve off a bucket from that to just cover that.
A
So
separate bank account.
Separate bank
Mm-hmm.
account. And then we know we've covered, if you're running short in that account, you quickly learn that, hey, I haven't bid this enough. I haven't put enough money into job expenses, or a job's going wrong, or, sometimes we have things like in the growing business or things like that, these guardrails that we're putting up.
Mm-hmm.
But again, that's the job expenses. I really usually put like the profit first. That's the name of the book. But, if you don't take that part out first, it's not going to be there. So we have an account called profit.
Mm-hmm.
We have an account called owner's pay, which
got to pay your own bills.
True.
Got to feed your family. Got to feed yourself.
Too often we're the martyr out there. We're entrepreneurs and we got to pay everybody else before the old saying that the leaders eat last or whatever.
Mm-hmm.
Well, I don't believe that's a inspirational quote, but if you can't learn to pay yourself, if you can't learn to run a business that can pay yourself, if you're the lowest paid employee in that business, and if you think about all the hours you put in, you might very well be the lowest paid you probably need to set up your own owner's pay account and make sure it's there.
Okay.
The next account is the tax account. And if you come up end of the year and your spouse has another job, whether she's a teacher or whatever she does, and then you're having to borrow out of your personal savings to pay for those taxes, and you need to put the tax money aside so that it is there, so that, the business needs to pay its own way. And if you're going to have profit, you're going to have taxes, whether you like it or not.
Sure.
And the last one is the operating expenses, or OPEXs. And that's the one that keeps the lights on. That's the one that covers your overhead. And again, if you can dial that number in, I don't have time to go into it today, but that is the number you're dialing in cash for your overhead. That's a better factor for overhead than what I see a lot of people bid their jobs with.
Okay. Once you get all these accounts set up, then you apply a percentage for overhead to put in with every job cost that come in, or does that change?
No, if you got 100% comes in, and then, we could debate it quite a bit about what the job expenses and how that's supposed to be done. My simplified approach in my book is, okay, we've got 100% to allocate. So
Mhm.
if you know your job expenses are 70%, and then, you're going to take 10% for profit or
Mhm.
5% for tax or whatever those numbers are, then we're going to allocate in that proportion. And, that's what keeps our guardrails up as you grow. If nothing else, you only have 20% in your operating expense account. That keeps your overhead from growing at a faster rate.
Mhm.
Then, it's very easy when you get in this growth mode. And I know we're going to have another episode on all that, but the bottom line is every dollar gets told where to go, and
Yeah.
you just wouldn't let your labor crew run wild without some foreman. That's what you need to be, is your foreman on your own cash.
Yeah, I don't know if this is nationwide or international, but a local advertising agency years ago for First Tennessee Bank literally had characters. They were money, and they were dressed up as the characters, and they were just doing stupid stuff, and it was really hilarious. But the whole point that was hitting home is managing that money. And I think the key point that really hits home with me, Wade, is you got 100%. That's it. That's 100%. Think about that. You got 100% income deriving from a job that you've given a bid for. You got 100% coming in. You have to allocate that. And I'd also go back another step and say, okay, I'm looking for a bag to breathe into, and I either didn't bid it right or I haven't allocated my resources properly. What do I need to do immediately? And I would say this first of all, figure out what you've done wrong. The next thing is, for example, that COVID money, that should have been going in there. No matter how bad your situation is, it's never too late to set up your accounts on your jobs to help you allocate what's coming in at any shape and time. You can't just wait till everything's perfect to implement profit first, Wade. You're in a situation you think, okay, well, what can I sell and get some cash infusion in? Say that COVID money came in. That would have been a great time to implement profit first and shore up the funds in those buckets that are missing that you need. Okay, that's the first thing. Then you wouldn't have gone and blown that windfall. But that's ancient history. But you have a ways of tightening your belt, bringing some cash in. Then you've got other jobs where that knot in the hose is cash flow on a job for costs you've already incurred you're not being paid for. Well, that's the situation where you're looking for a bag to breathe into. That's where you go to the bank if you have to. It's going to eat into your profit, but there you go. That's why banks are there. That's why you have lines of credit. It's a fallacy. We don't want to have to use them ever. But right now, you're looking for a bag to breathe into, and you're in a nightmare situation. You're like, hey, Wade, Stephen, this profit first thing, it sounds good, okay? I like the concept of it. It certainly makes sense, but I ain't got time for that. I got too many things going on. What would you say to them?
Well, you already said it very well. It's no better time than the present. And too often you're in this chaos, and you're never going to get out of this chaos if you don't stop and say, we've got to do some things differently. Just like on your job site, trying to get your foundation. I don't know a better way to sum this up than what you just said, Stephen, but in your foundation of your business, just like the foundation of a building you're building, you don't pour your concrete wherever you feel like it. You
Mhm.
plan for it. Why is your money any different?
Yeah. Don't let your money run muck and do stupid things. You got to control it. You are the boss of your money. It's like having some dogs that you never train. They're running amok and they're making your life miserable. It's your job to train them. And I really do just love all the concept. And I think about, okay, I am freaking out, Wade and Stephen. I'm freaking out. I barely have time to listen to this podcast. And I think of the steward is saying, put the oxygen mask over your own face first so you can help others. How many times do people use that in any kind of business analogy? But it's so true. Right now, if you are hyperventilating, listeners, take that oxygen mask and put it over your own mouth so you can breathe and deal with the situation. We have begged you over the years to have a great financial board of directors. Take a deep breath, talk to them, and then prioritize what you need to do. And then just stay focused on getting that knocked out. It's just not as hard as you think, is it, Wade? It just takes some work.
Like I said, sometimes you do need a different perspective on some things. So hopefully we've given you a little different perspective, just thinking of that foundation that I was just talking about. If you're pouring concrete, this is like setting financial rebar, I suppose.
Yeah.
You put that in there, keep pouring it so before you pour it on there, and it keeps you from cracking under pressure. So
Yeah.
on that note, I think we're getting a little long on this one.
No, hey, maybe we did, but go, baby. That's what I say to go. Just go, 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 go. This is great stuff, and you're going to love it. Just trust us. Give it a shot. It's what we see over and over again. It's a wonderful solution, and it's what we're most passionate about. So we hope you'll think about it.
Thank you, Stephen, because I've seen some huge turnarounds for contractors that actually embrace it. So, well, thank you all for listening to this episode of Contractor Success Forum. If you've enjoyed this, we do this every single week. Please like, share, subscribe. It really helps us out. So again, our whole goal with this podcast is to find your success in construction. So we thank you for being here. Have a great week, and we will see you on the next show.